Thank you, Sean. As I said earlier, and as our financial results prove, 2023 was clearly another year of recovery and improved performance for AMC. But it was not a good year for our shareholders. Adjusted for stock splits, the AMC share price has fallen to a fraction of where it was as recently as last summer. And I promised our shareholders that I would use this earnings webcast as a forum to provide them with some straight talk, to give them my take. So here's my take. There is so much garbage information floating around Twitter, YouTube, and other corners of the internet about AMC. Conspiracy theories abound, facts are distorted, bad motives are assumed when the exact opposite is true. So I want to address some of these issues so you get the straight scoop. I can't address all of those issues in the limited amount of time that we have, but I do want to address some of the most important. First, as to all the hubbub and litigation that surrounded AMC in the Delaware courts in 2023, I want to remind you that our shareholders got the right to vote on our proposed actions. And not only did the preferred shareholders vote in favor of what we did last year, but also of the common shareholders who voted, their count also was in the affirmative by a wide 72 to 28 margin. Then the Delaware courts ruled that the company could settle the litigation surrounding those shareholder votes and proceed to implement exactly as our shareholders voted. Second, as to dilution, back in the summer of 2021, a long time ago, after it was clear that shareholder sentiment was not wholly supportive of more equity sales, we said there would be no more in 2021, and we kept our word. Some critics, assigning us bad motives, were convinced that we would start more equity sales in the very first week of 2022, since the commitment we made only incorporated 2021. But they were wrong. We sat on the sidelines for almost 8 months in 2022. But by August of 2022, we did in fact introduce into the market AMC preferred equity units because, among other reasons, we wish to make it possible for AMC to raise more cash through the sale of shares if we thought it was advisable or if we needed to do so. We were very clear about this in our public disclosures at the time. Between August of 2022 and June 30 of 2023, AMC raised $418 million by selling what were called APEs. AMC's cash position at that end of June 2023 was $435 million. $418 million raised, $435 million of cash. Do the math. Had we not sold those shares, deduct $418 million from $435 million. Big companies, the size and scope of AMC Entertainment, cannot survive with only $17 million of cash on hand. Similarly, in the full year of calendar year 2023, AMC raised $865 million of cash through the sale of APEs and the sale of common stock. We ended the year with $884 million of cash. $865 million raised, $884 million of year-ending cash. Again, do the math. Had we not sold that equity, deduct $865 million from $884 million. Big companies, the size and scope of AMC, cannot survive with only $19 million of cash on hand. We did, in dilution, what was absolutely vital for your company to do to get through the many challenges that have been thrown our way. The absolute smartest way for AMC first to survive and then eventually to be in a position to thrive is to have robust cash reserves. Period. Plain and simple. There can be no argument. Cash is king. Third, from time to time, there have been matters related to the trading of AMC stock that have been of concern to some of our shareholders. As but 3 examples, the absolute number of failed-to-deliver shares, synthetic shares, or the length of time AMC Entertainment was on the threshold list, among others. We dutifully have kept the New York Stock Exchange and appropriate regulatory bodies well informed, and we make frequent public filings. But here is a key reminder and clarification. AMC is a company that is listed on the New York Stock Exchange, but we are not the stock exchange itself. Frankly, we have no ability to regulate or enforce trading practices on the stock exchange. And as much as some of you may wish it to be otherwise, our business is the exhibiting of movies in theaters. We are not in the business of reforming the financial markets overall. Then, as to our motives, it's disappointing how many people out there type into their Twitter feeds that the management team at AMC is somehow actively working against the interests of our retail shareholders and instead is nefariously on the side of evil, the so-called hedgies. A company that does not post the kind of improving financial results as AMC just did today, if one is out to sabotage one's owners. One does not sell $54 million of movie-themed merchandise in our theaters and online, as AMC did in 2023, versus virtually no sales of such items only a few years ago, if their motives are impure. I should point out, by the way, that selling merchandise was an idea that came in from our retail shareholders, by the way. Similarly, one doesn't launch popcorn to the home or blaze new trails with innovative concert movies that have been incredibly profitable and reputationally enhancing for AMC if one is trying to undermine our company's success. So given all that, then why has our share price been falling? Are those conspiracy theories right? There are many, many complicated factors that affect any share price. Some well understood, some not so well understood. But my own view is pretty basic and overarching. It is this. It has taken way too long for the entire movie theater industry, including AMC, to recover in attendance or to recover financially from the impact of COVID. Also bad, just as adjusted EBITDA in the summer of 2023 was returning to more acceptable pre-COVID levels, no one needed for the movie industry to be paralyzed by debilitating strikes, which will temporarily challenge AMC earnings in 2024. We believe there are numerous other reasons, too, like rising interest rates and inflationary wage and cost pressures, among many others. But in my mind, the key issues are, first, the long, drawn-out recovery, and then the strikes of 2023, combined with the steps we've been forced to take to wade through 4+ years of a depressed box office. These are the issues that have pressured AMC share price. So let's cut to the chase. Looking ahead, is there hope? As I stated earlier, the box office should start to strengthen beginning as soon as March, a month that starts a mere 2 days from now. It should further pick up later in 2024, and the box office for 2025 could be very favorable, as movies that might have been released sooner finally get released in 2025. So yes, in my view, there's good reason to be optimistic. That optimism notwithstanding, AMC must continue to address our debt load, extend our debt maturities, currently mostly in 2026, and push them out into later years, and also to ensure that our cash reserves remain robust. That is the recipe for success. Remember what I said earlier on this call. Cash is king. At AMC, our strategy is sound. Run the best company we can. Please our guests at theaters and serve them well. Prudently innovate. Drive the most earnings we can. Reduce debt, extend debt maturities, and have the cash reserves on hand to outlast the tough times. Doing all that, which is what AMC has been doing so well over these past several years, is what makes me optimistic and confident about the future. Because as the clear leader of the movie theater industry and the clear leader by a wide margin, AMC is doing all the right things. There's one more topic that I want to raise before we turn to your questions. And that is our interests, meaning the interests of our shareholders and my interests as CEO of the company and as a shareholder myself are perfectly aligned. I personally am AMC's largest retail shareholder. So, as your shares rise in value, so do mine rise. As your shares fall in value, so do mine fall. In the last 6 months, as the AMC share price has dropped, I personally have lost tens of millions of dollars in the value of my AMC shareholdings and in my granted but unvested stock. I assure you that focuses the mind. In my stock losses, I share in your frustration, I feel your pain, and I'm heavily incentivized to get the value of your AMC shares back on the right track. In the past 2+ years, I have been a holder of AMC stock, not a seller. Indeed, I have not sold a single AMC share since January of 2022. While I have forfeited granted shares on the same day as they vest to pay the federal and state income tax withholdings that are immediately due upon that vesting, I have not sold even one share in the marketplace, not one share in the last 25 months. I wrote often on Twitter that I ride with you. I am a shareholder. I am holding. I'm not selling. I ride with you. So when you get well financially with AMC, I will too. But if you're hurting from that investment, I believe that I too should be hurting with you as well. Therefore, to prove that these words are not hollow and to show executive leadership from someone who is in your foxhole, I want you to know that I recommended last week to the AMC Board of Directors that for the next 12 months, starting right now, my target compensation should be substantially reduced. While my actual compensation can be at the target, below the target, or above the target based on the company's financial results, the board and I agreed that my target compensation will go down right now as we move forward by 25% versus the previous year's target. And maybe even more of relevance, if you compare my new lowered target compensation against my actual compensation for the past year as most recently publicly reported, that's actually a 50% reduction in my potential compensation in the year ahead. There's no anguish in my voice about that. That is what a CEO of a company like yours should do, because I mean it when I say that I ride with you. You now know what I think. 2023 was a year of superb achievement and innovation at AMC. And fortunately, AMC starts out 24 with $884 million of cash. Cash is king. I've said it multiple times, and that is the guiding philosophy that has caused this company to stay in a leadership posture no matter what the world threw at us starting at 2020 and since. While the box office took a 5-month downturn starting in October of 2023 because of the long strikes in Hollywood, things will pick up considerably soon, and then again later in 2024, and 2025, which in the grand scheme of things is right around the corner, could be a gangbusters year both for our industry and for AMC as a company. We are in this together, you and I, and here's hoping that we all are smiling as we head into next year. With that, Sean, let's move to questions from analysts and from our shareholders.
Thank you. Ladies and gentlemen, at this time we'll conduct our question and answer session. If you would like to ask a question, please press *1 on your telephone keypad. A confirmation tone will indicate that your line is in the question queue. You may press *2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment while we pull for questions. And our first question comes from Eric Wold with B. Riley Securities. Please state your question.
Hey, good afternoon. Thanks for taking my call. Adam, I guess I want to go back to kind of one of the parts of the business that's, I think probably not as talked about, but the distribution business. I think, one of the knocks on the overall exhibition business in general for years has been that, the availability of content, was largely out of control. So when you get things like, the pandemic or strike, there's little that you can do to kind of drive content into your theaters. Obviously, this changes somewhat with what you do with Taylor Swift and Beyonce. I guess as you continue to build out that business, I know you talked about you're in discussion with other artists for releases later this year or the next year. I guess any sense of what you think the annual opportunity could be for revenue and EBITDA from that distribution business? And then, what do you think is the ability of AMC to kind of move outside of the concert or kind of musical film genre into other genres that may be, more direct competition with some of the other larger distributors out there?
Well, Eric, look, you're entirely right that if you look at the single biggest challenge that our industry has faced since the reopening of theaters at the end of 2020, it's in the lack of content. And we took matters into our own hands in 2023 with Taylor and Beyonce and had 2 grand successes. That causes us to want to do more. We certainly got the attention of the best musical artists in the world, and so there will be more of those. I don't want to quantify it. I've got a good sense of it, but I don't want to quantify it quite yet. Let's land some contracts for future concert films, and then we'll have a better sense of what you can count on reliably. But who knows where this will lead? There's other alternate content that we could focus on other than just concert movies. We could look to comedy. We could look to sports. When you think about the movie theater industry, it's a dirty little secret that the industry only sells about 15% of our tickets. I used to work in the airline industry. We sold like 75% of our tickets, not 15. There has to be ways to create alternate content that will not replace what Hollywood's doing, but will augment what Hollywood's doing by filling some of those empty seats that are just sitting there waiting to be filled. It also does sort of caused us to think, what other ways can we generate movie content in our theaters inexpensively? I don't think you'll ever find a situation, where AMC is writing a check for $50 million or $100 million or $200 million to make movies. But there are some interesting ways to collaborate with movie makers to take movies that might not otherwise get made and get them into our theaters and into some other theaters of our friends in the industry, both in the U.S. and abroad. So this whole notion of how do we increase content is something that's completely in our wheelhouse, and it's a direct result of our success in what we've tried to do in the fourth quarter and succeeded with Taylor and with Beyonce.
Thanks, Adam. Appreciate that.
Thank you. I'll now hand the floor back over to, I'll now hand the floor back over to Adam Aron to take some retail shareholder questions. Thank you.
We'll take it, Diego. We have had retail shareholders send questions in. Sean, what do they want to hear about?
Yeah, sure, Adam. So the first question is generally about the industry recovery, which we've certainly been talking about a lot today. But the question relates to, with players like Amazon and Apple entering this business, is it likely that we can see the release schedule really increasing past pre-pandemic levels in the future?
Well, that's a good question. But before we talk about whether we get beyond pre-pandemic levels, let's talk first about getting to pre-pandemic levels. Because as we sit here today, the movies released by the major studios are down about 25% from the quantity of pre-pandemic releases. The good news here is, as you know well, we talk to every major studio every week of our lives here at this company, and we know that studio after studio after studio sees the opportunity for them that can come from achieving high theatrical grosses, and one studio after another is doing all of its power to increase their release schedules, to get the release schedules first back up to pre-strike levels, and then hopefully even higher levels than that, moving back closer to pre-pandemic levels. Yes, it's true. Apple and Amazon are making movies. They're releasing those movies theatrically. We're working very closely with each company. Happily so. We welcome them to the party. We have enough screens in our company and in our industry to accommodate whatever supply of content all these studios can produce, and then some. I would point out that one of the comments in my prepared remarks that's so important is we've done so much in the past 4 years to make this company more efficient. Our profit per patron is up 37% from where it was when we entered the pandemic, which means we don't actually need the box office to come all the way back to pre-pandemic levels. We don't need attendance to come all the way back to pre-pandemic levels because we're making so much more profit from each guest who is in our theater. As for whether, in fact, and when the box office does cross that pre-pandemic hurdle and crosses $11 billion, we'll all find out together.
Great. There's related to that, there's some questions about diversification and what revenue diversification opportunities exist to grow and enhance our business.
So I don't think anyone's worked harder at diversifying their revenue streams in our industry than AMC has in the past few years. And some of them have been quite high profile. Things like giving Orville Redenbacher some competition on the shelves at Walmart with our popcorn lines that we took to the home, which is selling extremely well at Walmart. And we just, literally in these very months, are in the process of having extended our retail presence to Kroger and to Publix. We also went up on the Amazon marketplace. So that's an example of diversifying our revenues. Merchant, we launched our candy line, I guess it was in December, I think, at our theaters. I've tweeted publicly about maybe coming up with a house wine or house beer. Beyond that, though, I think the single biggest, most successful diversification play we've had so far is what we've done with movie-themed merchandise. As I said in the prepared remarks, we sold $54 million of it in 2023. Like 3 years earlier, we sold nothing. $54 million from nothing. We continue to be intrigued by diversification, and there are other diversification opportunities, but I think it's really important to say this. We worked very hard to bring all that cash into our bank accounts, as you know. And 2024 could be a challenging year, especially early in the year. We need to husband all of that cash and treat that cash as being very precious, because it's the thing which assures our survival going forward. Therefore, if we're going to look for diversification plays, we have to do so in a capital-light way. We have to be able to diversify, spending very little money to do so, because the smartest thing we can do with our cash right now is keep it for a rainy day.
Questions here on loyalty programs. There's quite a few questions on the loyalty programs. And people are asking if there's an update to the loyalty programs coming, any ideas such as bringing a friend along for A-list members in exchange for a fee perhaps, or a family plan for A-list, or other new creations for our loyalty programs.
There are a lot of ideas about our loyalty programs. Our marketing department right now is in the process of testing some things we've given a lot of thought to. A-List is of great appeal to us, of course. It's been a very successful program for our company. The most important marketing program this company has ever had is our Stubs frequent moviegoer program. And there are a lot of interesting things that we might be able to do to make Stubs appeal to more people and to cause people who are Stubs members to attend more movies. There are interesting things afoot about how might one qualify for Premier, as an example. There are other possibilities of, we have 3 tiers in the Stubs program right now: the free insider tier, the paid Premier tier, and the A-List tier. There's talk of creating a 4th tier of Stubs, somewhat in between the Premier level and the insider level, with new benefits. We're going to test right now, research and test right now for possible rollout later this year. And then there's a program near and dear to my heart, which is a loyalty program of another sort. It's called AMC Investor Connect. We have over 1 million members of AMC Investor Connect. These are our shareholders who've registered with us and told us that they're interested in our company. They're either current or former shareholders. We've been in frequent communication with them. We've had lots of advanced screenings for them. We've given them some free this and that, some free popcorns and some free drinks and other things. One of the things that we will definitely be doing in 2024 is reinvigorating AMC Investor Connect, adding more benefits to it, because we know how loyal and those AMC Investor Connect members are to AMC. We want to thank them for their loyalty and encourage them to visit our theaters over and over again. Those are just some of the things we're working on, but watch this space. You know, I might add that, you know, I think one of AMC's greatest strengths over the past decade has been, I think we've been the preeminent consumer marketer in our industry. Um, uh, just think about the Nicole Kidman campaign, for example, that took on like a cult-like nature. It really hit into the American zeitgeist. And one of the things that I think is fun about that is if you go to an AMC movie, there's something called the pre-show. It's the thing that comes up just before the trailers run and before the movies run. And for the first time in 4 years, starting in a couple of days, we're putting up a new pre-show on the screen. We think it's kind of beautiful and spectacular. We think people will like it. But one of the intriguing little twists is we're moving into phase 2 of the Nicole Kidman campaign. For the last 3 years, we've got a 60-second Nicole commercial, the same one that's appeared over and over before every movie start. And starting March 1, we're going to show 3 different 30-second Nicole Kidman commercials before the movie starts on a rotating basis. You won't get like 3 in a row when you go watch one movie, but as you watch movies going forward, you'll see 3 different Nicole spots that kind of randomly will appear in our theaters prior to the show. We're very good marketers. We use that for the benefit of driving revenues, and as you saw, our revenue growth in calendar 23 and in the fourth quarter of 23, we outpaced just about everybody in our industry.
Something new and exciting for people to see when they come to our movie theaters. I think we've got time just for one more question, which is related to capital expenditure. And the question is, what is sort of the ongoing CapEx level that we would expect over the next 3 to 5 years? The questioner here notes that pre-pandemic we were spending around $500 million per year on capital expenditure. What should investors expect going forward?
So for the past couple of years, we've been in a landscape of $150 to $200 million of annual capital expenditures. About 150 of that is to what we call maintenance CapEx, just to keep our theaters in good shape. You can't run a movie theater with a leaky roof, or an air conditioning unit doesn't work, or a projector that doesn't show movies. And then some of that CapEx has been used for enhancing our IT systems and growth-oriented projects, bring some spot acquisitions. You said we added 59 theaters into our system over the past several years. Some of our CapEx goes to bring those new theaters into our system. As you look ahead, those years of $500 million CapEx, those were in the days when we were, renovating, putting in reclining seats and 50, 60, 70 theaters a year. That spurt is way behind us. So I'd say that with one caveat, people should be expecting CapEx in the $200 million range going forward. And that caveat is this. Because of the tough years that we've had with respect to earnings over the last few years, we've put a tight lid on capital expenditures. It was crucial for us to keep cash in the bank and not necessarily spend it all. There are some obvious growth projects that if we were to raise an additional $50 to $100 million, for example, and we wanted to reinvest that back into our fleet of theaters, if that was something that would produce the highest and best return on that investment, it would have to produce a return on investment higher, for example, than buying back our debt at a substantial discount, which we've done a lot of in the past year or two. There's just some obvious things that are low-hanging fruit where we know the payback would be quick. And the most obvious of them is this. AMC has the largest number of premium large format screens of any movie theater chain in the world, and it's not close. We are 50% of all IMAX screens in the United States, for example. We are 100% of all the Dolby Cinema screens in the United States, for example. And what we've seen is that our premium large format screens command a price in the market that's about 30% higher than the normal so-called 2D auditorium price. They sell out first. The typical seat in a premium large format screen is sold 3 to 4 times more than the typical seat in an auditorium that's not a premium large format screen. And I could easily see us, we have about 600 or so premium large format screens around the world. I could easily see us adding another 150. And we would get a great return from that, but it's not a cheap endeavor. And we'd have to be very careful about how much money we invest and doing it at the right time. So I don't want to say that there's a lid on CapEx spending of $200 million because there are some low-hanging fruit, no-brainer ideas on how we could further drive profitability if we do have additional CapEx dollars to spend.
Right.
So I'm looking at the clock. We're past our hour, so we're going to bring this webcast to an end. I'd like to leave you with the final simple thought. 2023 was a superb year for this company on the march to getting back to pre-COVID levels of profitability. 2024 is going to be a bit harder, but 2024 is going to get a lot better starting tomorrow because Dune opens in all of its glory, and we're expecting it to be a big and successful movie. We hope you all buy tickets, go to the theater, be amused, be entertained. And as we look further beyond just this weekend, and we look ahead to the next year, which is, as I said, right around the corner, we really think 25 is going to be an incredible year for our company, and should be just as 2023 was the best year since COVID. We're thinking 2025 is going to leave 2023 in the dust in terms of how potentially good a year 2025 is going to be. So we're optimistic, we're confident, and we'll see you all at the movies. Thank you for joining us today.
Thank you. This concludes today's conference. All parties may disconnect. Have a good day.